Hi, I'm Eitan Pinsky from eitanpinsky.com. Today we're going to be talking about how to pay off your mortgage faster. Now that our friend Neil purchased his home and has a mortgage, he probably wants to pay the least amount of interest possible. The easiest way to pay less interest is by paying off his mortgage faster. Hang in with me here for a quick background on Neil's mortgage payment. At the outset of Neil's mortgage, the bank will usually fix for him a certain payment that he will have to pay every month. This payment consists of a principal portion and an interest portion. The principal portion is the amount of money Neil pays to decrease his mortgage balance with the bank. The interest portion is the interest Neil pays on the outstanding mortgage balance. For those number people out there, this interest is calculated as the interest rate times the outstanding balance divided by 12. 12 is for the months in the year. Because Neil is paying off a portion of his mortgage every month, he ends up having to pay less interest with each payment. In other words, even though his monthly payment stays the same, he pays more to his mortgage balance and less to his interest with each additional payment. So, if Neil pays off his mortgage faster than normal, he will end up paying less to interest. Now let's get started, Neil. The following are ways that you can use to pay off your mortgage faster. And the easiest way to pay off your mortgage faster is to do over and above payments. Many banks will allow you to pay over and above your current mortgage payment. Most banks will allow you to pay up to 2 times your regular monthly payment. Also, many banks will allow you to pay a lump sum payment towards your mortgage every year. Additionally, some banks allow you to increase your payment by a certain percent once a year. All 3 of these strategies allow Neil to pay off his mortgage balance faster. To reiterate, when payments are made over and above the regular mortgage payment, the next payment's proportion of interest and principal changes, where in the future less interest will be owed per payment. Decreasing Neil's amortization is another way for him to pay off his mortgage sooner. Remember that in the last video I explained that amortization is the process in which a mortgage decreases to 0? Well, if Neil now decreases the time he wants to pay off his mortgage, he is, in effect, paying more per month than he would have been with a larger amortization. This is the equivalent of making extra monthly payments on his mortgage, as in over and above payments, which allows him to pay less in interest over the term of his mortgage. One of my favorite and least understood payment options is called accelerated payments. With most mortgages, Neil is able to pay monthly, semi-monthly, bi-weekly, and weekly. But Neil is also able to accelerate his bi-weekly and weekly payments. To illustrate this, let's assume Neil's monthly payment is $1,000. This means that he will be paying $12,000 over the course of the year. If Neil were to pay semi-monthly, or every half month, he would be making 24 equal payments of $500. Additionally, if Neil wanted to pay bi-weekly, or every 2 weeks, he would be paying 26 equal payments of $461, or $12,000 divided by 26. However, accelerated payments use the semi-monthly payment amounts, or $500, to be paid 26 times. In this case, Neil will pay $39 more per payment, which goes to pay down his mortgage balance directly. Neil now pays $13,000 instead of $12,000 over the year. Accelerated payments just mean that Neil pays an additional monthly payment over and above his current payment. This payment goes directly to paying off his mortgage, which allows him to pay less interest over the course of his mortgage term. Paying off your mortgage faster is an excellent way for you to save money on interest costs while allowing you to become debt-free sooner. However, paying off your mortgage sooner may not always be the best strategy for you. In the simple case where your mortgage has a lower interest rate than your investments, you could be growing your money more than the amount you would save by paying off your mortgage. Please also remember that not every mortgage takes advantage of these valuable prepayment options. Make sure to ask the right questions before you choose the mortgage that is right for you. Thank you for watching eitanpinsky.com. I'm Eitan Pinsky. Contact me for all your mortgage needs.